If you are an investor, you must have heard of Warren Buffett. But what made him great? And what are the lessons we can take from his experience as a legendary investor? Welcome to the first episode of Investing with Legends, where we explore the timeless investment strategies of some of the most successful investors in the world. I'm Ipsha, and in this video, we will be discussing the key fundamentals of investing that have helped Warren Buffett become the Oracle of Omaha. By the end of this video, you will have a better understanding of how to invest your money wisely and build a snowball of wealth. Don't forget to hit the subscribe button to stay updated on the latest video and exclusive content. Now let's dive straight into the lesson from Warren Buffett. Lesson 1. Understand the power of compounding. Warren Buffett knows the secret of building wealth, the power of compounding, which he calls the snowball effect. Think of it like a rolling tiny snowball down a hill. With each turn, it picks up more snow and grows bigger and bigger. The more it grows, the more it can accumulate. By the time it reaches the bottom, it's a giant snow boulder. The same goes for investing. Consistent small action over time can lead to big results. Buffett's own success is a proof of this. He started investing at just 11 years old and credits time as the key ingredient to his success. If you want to follow his footsteps, start investing early and stay invested for a long time. With patience and consistency, your money can grow into large sums through the power of compounding. So go ahead, build your own snowball of wealth. Lesson 2. Invest in what you understand. Only invest in what you know. Taking time to understand a business, its product, finance, and competition is key to making smart investment decisions. By doing so, you can accurately assess risk and potential reward. For instance, if you are familiar with the healthcare industry, investing in a medical device company could be a smart move because you have expertise to evaluate the products, competition, and regulations. This advice can save you from costly mistakes and lead to more informed investment choice. Lesson 3. Investing in quality companies is the cornerstone of Warren Buffett's value investing philosophy. These companies have strong fundamental and sustainable competitive advantage like loyal customer base, innovative products, and efficient operations. By betting on their long-term success, you can weather economic downturn and appreciate the value of your share over time. Simply put, investing in quality companies is a smart move for your portfolio. Lesson 4. Invest for long term. If you are not willing to own a stock for 10 years, do not even think about owning it for 10 minutes. This statement highlights his belief in the importance of long-term thinking when it comes to investing in the stock market. What he means by this is that investing in stock should not be a short-term game or a get-rich-quick scheme. It takes time for a company to grow and for its stock price to appreciate. In the short term, stock prices can be volatile and influenced by a variety of factors, including market sentiment, economic conditions, news events, and even social media trends. However, over the long term, the underlying fundamentals of a company tend to drive its stock price. Lesson 5. Diversify your portfolio. Diversification is the key to protecting your investment. Even the most diligent research cannot guarantee the future success of any single stock or investment. Various factors outside of your control can impact performance. By diversifying your portfolio, you spread your risk across multiple investments, reducing your exposure to any one underperforming asset. This mitigates the risk of significant losses and safeguards against the unknown. Invest in multiple assets and sectors to increase the overall safety and stability of your portfolio. Lesson 6. Be patient. Investing success demands time, discipline, and patience. To be a successful investor, you need to control your emotions and wait for the right opportunity. Patiently waiting for the market to overreact to news and events create opportunities to buy undervalued stock. The key is to maintain discipline and wait for your investment to grow over time. As successful investing is a long-term game, even during tough times, staying invested and having patience can lead to fruitful results. And that's a wrap for this episode of Investing with Legends, where we learned from the Oracle of Omaha himself, Warren Buffett, We hope you have been inspired to start your investing journey and build your own snowball of wealth. Remember to start early, invest in what you understand, look for quality companies at fair price, diversify your portfolio, and be patient. If you are looking for a safe space to invest and grow your wealth, join Kuvera. Make sure you don't miss out on amazing and insightful content on investing. Make sure you subscribe to our YouTube channel right now.